Can the Tata AIA Fortune Guarantee Plan guarantee financial stability and peace of mind? Let us find out in an in-depth analysis in this video. Hi, welcome to holisticinvestment.in. We help individual investors like you to make the right financial and investment decisions to reach your financial goals in a more faster and smarter way. So before analyzing whether this policy will be fit for our investment portfolio or not, let us first understand what is a Tata AIA Fortune Guarantee policy is. So this is a non-linked, non-participating individual life insurance savings plan, and some of the key features of this policy is to protect your loved ones with a life cover in case of your absence. You get flexible policy term and premium payment term, and there are also guaranteed lump sum benefit which you get on your maturity, and there are higher benefits especially for female lives. You also have the option to enhance protection through riders. Now let's take a look at the benefits of the Tata AIA Fortune Guarantee Plan. So first is the maturity benefit, which you get paid when your policy matures. So sum assured will be paid on maturity. So the maturity sum assured is equal to the maturity benefit factor, which is multiplied by the total premium paid. So your maturity benefit factor will vary as per your policy term, premium paying term, gender, annualized or single premium band, and the entry age for this policy. So now let's take a look at the death benefit, which is given to the nominee or the legal heir in case of unfortunate death of the life insured during the term of this policy. So the sum assured will be payable as any of these three options mentioned in the screen, whichever is highest in value at the date of death of the policyholder. So it can either be the basic sum assured, which varies based on your premium paying term, and 105% of the total premiums paid up to the date of death, or the maturity sum assured. So out of these options, whichever is highest in value at the date of death of the policyholder, that will be given as a death benefit to the nominee or the legal heir. So these are the benefits available under this policy. So now let us take a look at the advantages as well as the disadvantages of the Tata AIA Fortune Guarantee Plan. So first, the advantages. You have the flexibility to enhance your coverage by adding optional riders, and you can even tailor the policy term and premium payment period of this policy to suit your own financial needs, and the benefits mentioned in this policy is guaranteed. And now let's take a look at the disadvantages. So there is no loyalty bonus for such a long-term investment, and this is a low return product. These are all potential drawbacks or potential risks which you need to carefully consider before choosing to decide in this policy. So now, as we have taken a look at how this policy briefly works, now let's move on to the main part of the video, where we are going to analyze whether investing in this policy is worth it or not by evaluating its performance, especially the internal rate of return, the IRR, because this calculation helps us estimate the returns and allows for comparison with other investment options. Because why do we invest? We invest for the returns we get in our hands at the end of the day. So that's why we're going to calculate the IRR. So just for calculation purpose, let us assume that a policyholder who's 35-year-old male purchases this policy with a sum assured of 10 lakhs. The policy term is 15 years with a premium payment period of 5 years, and he pays an annual premium of 1 lakh rupees. So the maturity benefit which is available at the end of the policy term is 9.82 lakhs, assuming all the premiums are paid by the policyholder. Now if you calculate the IRR based on the Tata AIA Fortune Guarantee Plan maturity calculator, you get an IRR for this cash flow is 5.31%. This return is lower than what you might earn from a bank fixed deposit. So what is the use of investing in it if it gives you a return lower than a bank fixed deposit? You can invest in a bank fixed deposit as well, right? Because given the 15-year policy term, this is a long-term investment, but the returns here doesn't justify the duration. Moreover, the sum assured provided in this policy is too low to even adequately cover the basic needs of your family in case of unforeseen events. So although the benefits here are guaranteed, the combination of low returns and insufficient sum assured makes this policy an unsuitable choice for both life insurance and savings. So instead of investing 1 lakh rupees annually in the Tata AIA Fortune Guarantee Plan, let's explore an alternative approach and compare the potential returns between these two products. So in this scenario, what we are going to do is we are going to separate the insurance and investment and invest in it separately. So let's see if the split strategy yields us better results. So for life cover purpose, we are going to opt for a pure term life insurance policy with a sum assured of 10 lakhs, which cost an annual premium of 7,900 rupees annually. So the policy term is 15 years with a premium payment term of 5 years. So the metrics are kind of same or similar with the Tata AIA Fortune Guarantee Plan, but only the premium differs here, because there we paid a premium of 1 lakh rupees while we are paying a premium of only 7,900 rupees here annually. So this leaves a balance of 92,100 rupees, which can be invested elsewhere. You can choose your investment based on your risk tolerance, like debt instruments for low risk investors or equity investments for those who is willing to take on more risk. But in this example, we will invest the remaining amount in an equity linked savings scheme, which is an ELSS mutual fund. And we have chosen this fund based on the track record, because if you look at its track record, if you have choose to invest in it for more than 7 to 10 years, it has consistently given more than 12% per annum returns, and it also has tax benefits under section 80C. Now if you take a look at methodology, after paying the premium for the pure term policy, the balance is invested in the ELSS fund. So upon redemption, the capital gains tax is applied. The pre-tax value of the ELSS investment is 20.35 lakhs with a post-tax value of 18.54 lakhs. So the post-tax return IRR for this combination of the pure term policy and the ELSS investment is 10.52%. This approach results in a final value that is double that of the Tata AIA Fortune Guarantee Plan, with an added benefit of flexibility in redeeming your investment as needed. The returns also exceed the inflation rate, which is a significant advantage for long-term investment. So from this comparison, it is clear that the Tata AIA Fortune Guarantee Plan falls in short in terms of life cover, returns, redemption flexibility, making it an inferior choice for investment. Now, what is the final verdict on the Tata AIA Fortune Guarantee Plan from our analysis? So, as you can see, the Tata AIA Fortune Guarantee Plan is a traditional life insurance policy that combines life cover with savings opportunity. However, it doesn't offer any standout features compared to other plans on the market. The IRR analysis also reveals that the returns are not favorable for long-term investors. So, these low returns could hinder your investment strategy, potentially leaving you with a shortfall in the corpus needed to achieve your financial goals. Additionally, the life cover provided by this plan may not adequately support your family. So this indicates that this policy falls short of meeting investor needs both in terms of insurance and investment, and also it has a high agent commission. So rather than investing in a subpar plan like this, consider redirecting your savings into a more rewarding product. So you can opt for a pure term life insurance policy, which can save you on premiums and allow you to allocate more funds towards wealth accumulation. A well diversified investment portfolio is key to achieving your goals. So you can definitely invest in asset classes that you are confident in and that aligns with your risk profile, like equity and debt instruments. Choosing the right product, building a solid investment portfolio, and regularly reviewing your strategy are crucial steps in securing your financial future. But if you need any professional guidance during your investment journey and your financial planning journey, consider consulting a certified financial planner who will tailor a plan based on your risk tolerance, time horizon, and your life financial goals. If you want to read more about this policy, then you can definitely check out the blog post we have posted on our website through the link in the description. And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.